Well, joining me now from Bern, Switzerland, is Cornelia Meyer. She's chairman and chief economist at LBV Asset Management. Thank you so much for your time. As we, have just seen there, the opening on Wall Street, a very mixed picture. In fact, it's kind of been a mixed picture all day after that massive shock of retaliation from China announced just a couple of hours ago, tactically announced actually 2 hours ahead of opening on Wall Street. I just first of all want to get your reaction to this escalating trade war we are seeing between the United States and China, where it's all going to lead.
Well, it's not going to lead to a happy place because, as you see, stock markets are reacting. And what really concerns me is the absolute volatility that we're seeing. The VIX is out of bounds. The volatility index is out of bounds. And that is not good. Investors and the participants in the economy need stability. What we see is, I think, goes well beyond just some trade war. It is also a realignment of the global architecture, trading architecture, which has served us well ever since the Second World War.
Yeah, and I want to talk about sort of reorientation, as it's being called. But first, we just heard a comment there from Bill Ackman, a close ally of Trump, breaking ranks once again to raise the alarm that there are red flags happening here in the market. Bond yields are up. There's been a drop in the dollar. There's a drop in commodities. How much of a concern, for those of us who don't quite understand the intricacies of that, how much of a concern is that, particularly as it relates to the bond market?
Well, it certainly is a big concern, and let's not forget how the U.S. has a huge twin deficit. So what's happening in the bond market, what's happening with Treasury and Treasury yields, is very important. So yes, that should be a concern. And Bill Ackman is not alone. Ray Dalio has said yesterday, I think, another big investor has said yesterday. Iconic investor, this is not just about tariffs. This is about a geopolitical, geoeconomic realignment of the world as we know it. And let's not forget, globalization took something like 40 years in incremental steps to get where we are now. And it's not a light switch. If you try to undo it overnight, there will be people suffering. There will be economies suffering.
I know, Cornelia, you're a bit of an oil expert. I don't know if we have oil stocks that we can show on our screens, but we know that the price of oil has continued to fall today. The lowest point, actually, we're reaching now since 2021. How concerning is that as we weigh the likelihood of a global recession? Because I'm seeing some economists predict that we could see it as soon as this quarter.
Well, absolutely. And, oil will move with the macroeconomics. Oil will go up when we think, the economics the economies of the world go gangbusters. It will go down if we look at the recession. On top of that, we had, and this was long overdue, OPEC unwinding some of its 2.2 million barrels a day of voluntary cuts that they had because the oil price was just always teetering very low. So I think this is very bad. You look at OPEC's monthly oil market report last month in March, where they said they think the oil demand is going to grow 1.4 million barrels a day this year. I don't think it will grow that much if we really go into a global recession.
And you're talking about, how all of this is going to contribute to the complete realignment of markets globally, of industries globally. How much reorientation are you seeing already in supply chains from the likes of automakers, computer makers, and how quickly, really, do you expect industries can rejig their global supplies in this climate in real time?
Well, the problem is it's not a light switch, especially when you look at tech companies. This is these are very highly specialized factories. This is not, you're not talking about diaper factories that you can just put up. These are highly specialized factories. So this will take time. But what we'll see in the meantime is a redirection of trade flows. You know, a lot of the Chinese trade flows that were going to the US, flooding the Walmarts and you know, bringing iPhones to the US, they will probably now go to Europe or other sort of affluent, semi-affluent markets. So what you always see when you have these realignments, trade flows will realign or will rebalance. And then over the longer term, we will see a realignment of supply chains. But again, it took 30 to 40 years to get the integrated supply chains where they are. They're not going to, we can't change them overnight.
I mean, that is a fascinating point, isn't it? I mean, it's taking decades really in the making for that type of those type of moves to happen. Cornelia Meyer, we really appreciate you being on with us just as we see this opening bell, and we'll be back in touch again, I'm sure, in no time at all. Thank you. Now.